The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. And I hope you're having a great day today. We're going to go ahead and check out, let's see where the market's at right now. We got the S&P up 7.5 points right now. We got the Russell up 3, and we have the Nasdaq up 16 points on the day. We'll get on over at the Dow. It's up 59, not giving us our triple-digit day like we've had so many days of most recently. And we got oil right now up 89 cents. So got oil up 89 cents. Natural gas is up 1.5% on the day. Corn is currently pretty flat on the day. It's just up a point. Soybeans, the ags, not a whole lot of movement from yesterday's settlement price. We'll look at them here in detail in a minute. But both of them flat on the day. We got the euro dollar down 45 pips. We got the Aussie dollar down 82 after last night's interest rate announcement. Was looking at that one, going short on that, and was the big thing of the day. We also got retail sales coming out tonight on Aussie dollar. Usually about a 30-40 pip move on that. We'll talk about that one. And looking on over, like I said, pound dollar down 42 pips, dollar CAD up 31, dollar franc up 53, with euro yen up 93 pips on the day. Pound yen currently up 99, and dollar yen up $1.02. So the yen is weaker, and the dollar is stronger. And that looks like that is just continuing its trend. It's been moving like that for a good chunk of the day, to seeing that continued dollar strength and yen weakness, watching the dollar yen rally. And let's see here. We got gold currently down 14 points. We got silver down 1% on the day. Both gold and silver down 1%. Copper currently just down 0.5% on the day. And that gives us our current market wrap. And now we can go ahead and check out each one of these markets, what they're doing, how they're laying out, and we'll look at the news along with everything else. Like I said, the dollar yen right now is really taking off. Let's go ahead and just pull that chart up and look at it, because we can see the movement currently happening. And it's been just a nice, sweet trend. We are currently at the 1 deviation level, so that's something always to be aware of when you hit that 1 deviation. So we should have moved our stops. If you haven't moved your stops up, definitely be tightening those stops. But just look at this. I mean, this sweet, perfect move all morning. Got that little flat time. Not a big surprise there, right in the lunch hour. Starting to come out of the lunch hour, trying to see if it can do a little bit more. It's like, hey, you know what? We're going to hit at least 1 deviation. That's what we're looking for. And we got it. So next thing you want to do is you want to go ahead and on that 1 deviation, let's talk about trailing that stop. Let's zoom in right here and look at this. So we post these deviation levels every day at 8:15 p.m. right there. Just check it out, Diagnostic Box Spread Analyzer on the homepage of TFNN. And you can get access to the deviation levels, but 5 ticks below that our stop right here. Now, obviously, that's not very tight. You might want to feel like a little nervous, because you got a nice big move there. You don't want to give up 30 pips of profit. That could be, $30. It could be $300 on a mini lot. That could be $3,000 on a full lot. So how can you take advantage of that? Well, one of the things is, one of the rules you got to remember on the deviation levels is if it closes above a level, you tighten the stop. If it closes at or below that level, without coming on back down and hitting the stop loss, then if it closes above it again, you can tighten it again. So right here, we're going to go ahead and tighten that stop further on up on the dollar yen right here. 5 ticks below the low, which the low of this bar is 57, so we're going to put it right here at 52. And why 10 minutes? Institutional level, I know a lot of good traders that use these bar sizes for 10 minutes. And I don't usually take all my trades based on them, but I do trail my stops based on 10-minute bars. And just doing this radio show, honestly, month after month, for over, I guess, over a year now. At least about on a year right now. I call these out every day. And I started noticing this pattern, and that's where this came from, is I just noticed it was a great place to use for trailing stops. And so right now we have our stop right up there, just 5 ticks below the low of that bar again. The low on that bar, just to, if you are in the dollar yen currently, is 100.58, so that puts us 100.53 would be where our trailing stop would be. Not a bad trailing stop, nice tight, right up there as close as we can really hug that one deviation as possible. It came on back down a little bit, but it's just oscillating right now. Probably not expecting a whole lot more movement. If it did come down and it did hit this, I would definitely expect chop, maybe a little bit of a reversal, not a massive reversal, maybe a little bit of a reversal into the end of the day if the dollar starts getting weaker. But the yen has been just so weak all day long that combined with the dollar strength, that really made it the perfect pair to trade today. And you don't get much sweeter of a trend than straight up and then straight up again. And by using the 10-minute deviation stops, it helps you along the way on tightening those stops. And like I said, we do put it 5 ticks below. So I'll show you what would happen on the way up. So 0.5 would have tightened it again right here. And then we finally closed above the 0.7, so we'd have tightened the level right here. So that would have been 100.26 would have had it, 100 point, I guess what was that, 100.21. So right there. And then we go over here, we go, okay, well, we closed above it, but then we closed below it, but then we closed above it again. Well, that lets us tighten it up. We might get hit on this one, but we're not at the, the 1, so we don't have to be as cautious about an additional entry. But let's look at it. What is our low? 100.29. That puts us at 100.24. So right there. And this goes down to 100.24. So it does not violate the stop to trigger it. Meaning we're going to stop entry. If we break below 100.24, we don't hit it. And so we go over here. We're still in the trade. We get to write it on up. Now, if you did get out right on the 5 ticks, you didn't make it violate the 5 ticks, you'd have been stopped out. You could have got back in easily right on the breakout of the previous bar's high. And then following that on in. But it's a very simple strategy. I'd be very hesitant to add on another position at this point. We're late in the day. It's 1 o'clock. The FX pits close in 2 hours. And trading volume is going to start getting lighter and lighter. Be very careful tomorrow and Friday because volume is going to be much lower. So we can get some big swings. And you want to be, just careful when you're trading those kind of trades whenever you're in low volatility. Now, there's one place I will actually trade during low volatility. Now, I'm going to be taking off and enjoying some time off for the holidays. Every once in a while, I may hop on the charts. I can't resist. I want to place a trade. And so when I'm looking at the trades, I'll look at them and I'll check them out. But again, there's one place that I'll trade right around holidays. Because I'm sort of afraid, honestly, to trade futures outright on the holidays because this low volume, they can just make insanely, just reversal moves. But that's Nadex. And if I go to Nadex, check it out. You can go to Our Products and then click on Demo Account. Once you've done that, fill in the username, first name, last name, phone number, email address, apply for demo. They'll send you a password and you'll get access to, the password takes maybe 10, 30 seconds to get to your email, maybe a minute, I don't know, however, fast or slow your email is. Then you can log in right away, right up here, log in. And by the way, you can get a live account. It's only $100 to fund it. So, why not get it going and get access to actual live account data. But, and the demo is live as well, but it's not the exact same because it acts like its own exchange. So other traders will impact the market, and the strike can sometimes be a little bit different, things like that. But they'll give you $25,000 to start with. You can grow it from there, hopefully. And, I just saw some traders in a trading competition. They knocked it out of the park on it. It was pretty cool. But you can go in and you can get started, start learning how to trade Nadex. I talk about it each and every day. But if you want to trade these next 2 days, this would be a place to check out trading Nadex. And, I had the education built in with the box spread analyzer. You can check that out. You can check out the Nadex YouTube channel as well. They have a lot of education there. But the biggest thing is just using the scanners to make it easy because there's a lot of, I guess you could say, math because there's so many choices. Nadex, one of the big things is it gives you tons of trading opportunities each and every day. The problem is it gives you tons of trading opportunities. So when you're ready to buy, you may have, 100 different choices. And that's, to say the least, a little bit overwhelming. And so what I did is I had made this box spread analyzer and the binary analyzer, and I'm working on a hedge scanner right now, and I'm hoping to release soon. That'll make it really easy for you to hop in and place trades. But we already have the binary analyzer. We already have the spread analyzer. And so you can go in and I'll show that to you right now. And it makes it easy to pick out what trade you want to do. So you're like, hey, based on my chart, I want to buy. Based on my chart, I want to sell. And so you go over here, you'll just click on the spread scanner, or we have the binary scanner, and you can choose the market. Like, let's say you're trading dollar-yen, and you can say buy, and it'll show you every possible contract that currently exists, what the risk is, what the reward is, what the distance to break even is, risk-reward ratio, payoff, how long it has till expiration. You can go over here, you can go to binary scanner, and you can check out trades. Like, I like to do premium collection. I've done quite a bit on the show for you, sort of teaching you different trades that I take advantage of. Like, obviously we have a long bias on the dollar-yen, so you could go in right now, and for 2 o'clock expiration on the dollar-yen, if we go up, let's check this out. We'll see here if we can find a trade that we like. Let's see. Put this to the side. Put this one to this side. And we could go in, we could buy a 100.62 for $70. That $70 risk, $30 of profit, and it's really close to the market. I don't like the trade at all. It's only 4 ticks away, and I have 40 minutes left. We have 100.57. I like the distance. I don't like that we're waiting 40 minutes for it, so we're going to wait. We have another one at 100.52. That's pretty solid. That's down where our stop is, but it's only like a $7 profit. With 42 minutes left to go, that's just, I don't like the risk-reward ratio. I expect the risk-reward ratio to not be great on these trades, but I expect the probability to be high. And so the closer I can get, I need a natural entry where I expect the trend to go in my favor, or I need very little timed expiration so I can just follow the current trend in progress and take advantage of it. And if I only have 40 minutes to go, that's not just a whole lot of time. And we're already, I think, near an exhausting point on the dollar-yen. But I'd literally go in here on the scanner and I just put in simple information. I'll put in live or demo, you choose, and it'll feed the live or demo data feed. And then for a premium collection, I choose 70 to 95. And then I'll move it down to like 1 hour to expiration or less. And then I'll choose my market. And what it'll do is it'll drop off every other potential contract and just show me what qualifies. If I don't have these settings, this is what I'm going to see. Just on, by the way, dollar-yen. These are all the choices that I get the pleasure of going through and trying to figure out which one's the right one. Over here on Nadex, I'm like Forex binaries, dollar-yen, and then click, 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 and trying to analyze all that. Well, why don't we just filter it down and make it easy? What is my trade? What do I want to accomplish? I want a short-term trade. I want to bring in a nice return. Let's use the scanner. And we'll narrow it down. All right, I'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. And so checking a few things out right now, just looking at everything and seeing what we got that might work for you here. But we're looking at the dollar yen. We're talking about that. Let's go and flip over. We'll look at the indices. They've been reversing and heading their way down here. So let's see where they went up to and where they're coming back down from. So let's go ahead and check out the S&P right now. And one of the things I talk about is you need to be, if you're an indice futures trader or major indice, you need to be looking at the broad market index. Okay? So make sure you are watching this. If you're not, you're at a severe disadvantage. And because most I don't know too many traders that don't look at the broad market index that are actively trading like the S&P, the Russell, the Nasdaq. And this is all of the shares on the New York Stock Exchange, how many are up versus how many are down. And obviously there's a negative bias, a positive bias, whatever, but also the trend. So we ran up this morning on the news, but that news ran out of steam, and it started trending south. And it should look very similar to your chart, to your S&P chart or whatever. But sometimes, some just take a little bit longer than others to turn around. And I really don't like trading against the trend of this. It'll also let you clearly see chop. And you can also look at all sorts of pennants and everything else, stuff that I really don't usually watch. But looking at the broad market index is a great way just to go, you know what, you don't have to be a rocket scientist, you don't have to be a veteran trader to figure out that the puppy is trending down. So, you don't want to take any long trades at this point. If you're in long trades, at a certain point you may want to start hopping out of those trades as soon as you can, trying to find some sort of break-even exit if possible, once you realize that you're definitely in a down trend. And something else is you can apply like 8-period moving averages. That's, I think, one of the best simple moving averages that does a great job of hugging the trend. And so we'll throw that on there and apply that. And you can even put, an indicator on the broad market index. And so right here you can't really tell. I mean, it looks like at the beginning of the day it's not going to be useful to you because there's this big gap. But, within a few bars, usually, around 940 or so, the thing ought to catch up. And you can tell the thing's just in chop. There's nothing happening. But then you can tell, within a couple bars, we're in a trend now. This thing has been sidewards. And boom. So like 1210, 1220, that we're definitely trending. So you should be looking for short setup trades. And, maybe looking at each pullback, all that stuff along the way. But right now we got the S&P and probably the others going in the same direction. Let's go ahead and check out, we got it up. We'll go ahead and look at the NASDAQ. NASDAQ's doing the same thing. Looks like it decided to head south even a little bit sooner than the S&P. About the same. They're pretty much all flat before they hit, but 0.7 on the S&P. Let's go ahead and go over here to the Russell. We'll get that one real quick. And I didn't even make to 0.7. Went up to 0.5, and then finally turned around, and it's been heading south ever since. And that 10-minute deviation stop is a really good indicator for you. So let's see here. We got Russell and we got the Dow, the last major U.S. index here. We'll look at. We got 0.5. We got 0.7. We had pure chop for hours, which is a great butterfly time. And heading on south at this point. So we have that like 11 to 12 range, man. That's just, that was just, especially the 11 to 12 right there. That was just the perfect butterfly chart right there because you're looking for a very range-bound market. Now let's go in and let's check out, we'll look at corn. Very flat today as far as the settlement. Let's see the intraday. Intraday looks like we didn't even hit half a deviation down or half a deviation up. Really small moves. From high to low, of course, we did have one. You can measure, from high to low, which is your true deviation move total. But we got, 8 points right there. Half a deviation, looks like the difference on that approximately, 4.75. So, it almost hit, a deviation, but I think we had to have about 12 points or so, maybe even more than that. Yeah, we're at 10 points on a deviation. So, it's almost hit a deviation, but really just nothing there. Really, honestly, a good butterfly day there, too. Just with the range-bound market we have over on corn. And we got the exact same thing going on, I'm sure, over on soybeans. But we had a nice pop there. We'll talk about that when we get back from this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Going back here to the Diagnostic Trading Hour. Going ahead and we're checking out soybeans right now. We got soybeans. They were moving on up. They are very flat on the day, but we did hit a deviation out of the gate. Just bam. And sort of reversed on us. You know, you go look at it, it was sort of trending down, and then it just ran up. And so you may or may not have got that depending on what kind of chart type and style you use. But you should have trailed your stops, would have trailed your stops up, and then the thing reversed all the way back down, a full deviation, even a little bit more than a deviation and a half. So some major early AM volatility. That's why I love trading nags. That's why a lot of people hate trading nags. But I don't trade them outright on futures. Now, I will spread. You know, you do bean spreads and stuff like that. You know, those are really fun. They're easy. They're just simple. They're sort of boring. But they can work pretty well. But as far as just outright, I like trading on Nadex because I don't have to worry about that, you know, those crazy moves. And because my risk is always defined. And depending upon where my risk is at on the trade, I can maybe even choose not to be stopped out on a trade. So, which is pretty cool. But right here we can look at it and to see, you know, what markets exist and what trades are possible that we can take advantage of. So, like I was telling you earlier, the dollar-yen. We're narrowing down all those choices. So, first thing I'll do to narrow down is I'll go and, okay, I want to do premium collection. Well, my roll on that is 70 to 95. I'm not going to take a trade for $95 risk, but what I am going to, I don't want to not see a trade because if I put 90 and it goes like 90, 91, 90, 91, it keeps dropping off the list. It's annoying. So I'll put it at 95. And I'm usually not going to do a 70 either. I just don't want it to disappear because it goes from like 75 to 74, 75, 74. So I put a few dollars padding on each side just so the trades I'm actually interested in aren't just appearing and disappearing over and over again. Now, I'll then move down or up, depending upon what strategy I'm doing, the time to expiration. And if I'm directional, like let's say I'm only buying, then I'll click buy. And by combining all those pieces together, it'll go in and it'll help me easily find basically which trades I want to do on the dollar yen. And basically it makes it very easy to trade Nadex. If you don't do this, then you have just way too many markets that you're trying to narrow it down from. All right, so that covers dollar yen, and we cover the ags, we cover the indices. Let's check out the metals for the day right now. We got gold right here, and gold just closed on down. And let me back out. We'll look at the move on that. We got a positive 5 to a negative 5. We got a solid, perfect deviation move from a high to a low. Definitely would expect gold to be cooked on that. But it moved on up when it moved on down, and it moved right down into gold's close. Closing right at the negative 0.5 deviation after hitting the 0.5. So between the two, we got a full deviation move, 0.5 plus 0.5. Perfect move. Let's check out silver. Let's see how it's scrolling and rolling right there across the screen. And I had a pretty similar move. Didn't get a full deviation on that. Got pretty close. And almost hit a positive half. Went a little bit below a negative half, but not a total deviation move. But you can see how it just settled right there, right at the deviation. And wrap up with copper on our metals there. And copper, not near as volatile today, but just really doing a big swing trade movement, bouncing between settlement and half a deviation move on the market. All right, now let's go in, let's dig in to these FX pairs, because we had the Aussie dollar released their interest rate statement last night, and I mean, it was just this perfect short setup. I was watching, I was like, drop, 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 and I mean, it flew down. And then after the massive drop, I'm like, okay, I think I'm done on this trade. Like, it may go down further, but I think I'm done. And I got in right here, like just right after the news came out. And that was my plan, was post-news trade. I figured it'd be weaker and on the Aussie. And because on their last statement, they released that they're considering lowering the rates if the economy worsens. They talked about how things are getting worse, so the chances of them lowering the rates are increasing more and more and more. And so right over here, I basically got out on a trade that I posted out there. And that market dropped down, got out, and then it pulled back up. So it hit the 0.7. Look at that. Bounced off of it, came on back down, and finished at a perfect deviation. If we're doing one more little hit right now, it's just basically sitting right around the deviation. We've got about an hour and a half till the Forex futures markets close over on the CME. And but just very predictable move. And you had time. That's what was really cool about this. I like it when you get time to place a trade, because sometimes in the news they'll move way too fast. And so I'll show you. I was looking at this. We'll go down just to 1 minute, and you really had time. A lot of times these news markets will fly, and there's just no time to react. And let me use the zoom feature on here. We'll just zoom in on this part. There we go. So the news comes out, all right, 12:30 a.m. in the morning. Interest rate staying flat. Statement comes out. Markets aren't looking so pretty. A little volatility. Boom, boom, boom. Okay, I have a short bias. So instead of straddling, because I didn't expect this to be just a super, super volatile move. I'm not expecting 70 or 80 pips. Now, we got it by the end of the day. We got about 80 pips. But, I mean, it took all the way until 2 a.m. And I just expected to get about 30 or 40 pips on the move, based on actually 45 pips is a high to range low. And so I didn't want to do a straddle. I wanted to go directional on the trade. And the only way to really go directional was to either do it before or after, and I figured after would be better. So it flew up, flew down, and then right here, about 3 minutes after the announcement, I got a short entry, because remember, if you hear my show, I always go in when it breaks a large low there. So when it goes in and breaks that low by 3 ticks, I'm in. Market's moving down further. Then I start seeing this sort of playing right here, and I'm like, I think I'm just going to call it. And so got basically a good chunk of the move, and I didn't have to stay up till 2 or 3 a.m. to take advantage of it. And it finally did actually come all the way down. It hit over here at the 0.7 deviation level. And if you give it enough time during the day today, it dropped on down and it hit the 1 deviation. So right there, actually, I hit the 1 deviation at about 2 a.m. Okay, but you could have, I could have waited for 2 hours. I didn't want to wait to grab those additional pips. I got my 40 expected pips. So right here, I got in at 215. You're getting out like right around 176. That's about 30 pips right there. But then we got to add in the height of the low. So if we measure from here, like the initial announcement goes up, comes down, does the pullback. That's 67 total. And if you go in from getting into about right here to out about right here, about 36 of the pips. So, I mean, it's like we're right within that 45 pip range, right in the middle of it. Let's just grab it. And I don't want it to reverse on me and give all the money back. And you can see that it did definitely pull back up here to the 0.5 before it decided to do a full, about face right there and retrace all the way back down to the 1 deviation level. And we're seeing really a lot of strength over in the dollar, a lot of weakness in the yen, a lot of weakness in the Aussie, and we're seeing moderate weakness over in the euro and the pound right now. And we're seeing the markets also are getting pushed down right now as well. So we talked about a little bit earlier about how we're looking at all the indices moving down at this moment. And I'm seeing just a lot of noise, market noise come through. I sort of like listen to the pit, but I listen to it electronically. And listen to electronic noise in the market. Now, if we go over here, we can check this out. Let's look at euro dollar. And just sort of seeing, like I said, moderate weakness, but a lot of strength on the dollar. So that's pulling the euro dollar on down right there. And we have, look at that. I mean, like to the tick. Look at it. It just bounces right off the 1 deviation level and flies back up. And I'll throw this back over on our 10-minute charts. That's the way we're used to looking at it. And we got that move down to 1, back up to 0.5. We're moving back down to 1. We'll probably settle right around 1, about 12989. And let's look at the pound dollar over here. And move from settlement down to 0.5, down to 0.7. Not as weak as the euro today, but nevertheless still some good solid moves to take advantage of. Now we also have some decent strength in the franc and the CAD, which means we're going to have strength in the dollar, strength in the franc, strength in the CAD. That makes it a little more difficult to trade. It's going to make it a little more choppy. So either you're going to butterfly that or just expect choppiness on it. And, we got an early morning little rally right there, but, I mean, if you just look at overall, we're just getting total choppiness. So if I'm getting a lot of strength in CAD, a lot of strength in dollar, then I'm going to look at butterflying because I know they're just going to be battling it out, just up and down, up and down, up and down. And you can see how we've been in this range for about 2 hours right here, just playing a 15-pip battle over here on the dollar franc at the moment. If we look at dollar CAD, we got the same thing going on. We look at the chart, and this is without looking at charts. But we got the same, both of them are strong. And, yeah, we're ranging between like 522 and about 540. So we have about an 18-pip battle happening right now. And so I don't expect that to change anytime soon. And that wraps up our currency pairs. And so really the last piece, let's go over, let's look at our energy sector. So we got oil. And oil right now is, look at that, perfect move to 1 deviation. I mean, that's just, it doesn't get prettier than that. It's right there on it. And it's trending up all day. Got a perfect $1.30, which is what we were looking for. Got a nice $1.30 move right there on oil. And we can check out natural gas. On natural gas, and move from settlement on up to 1 deviation. Perfect move. We called it. We post these 8:15 at night. We don't make it up in the middle of the day. And it's just really cool. It's very helpful because this is how far the market says the market will move. This is our expectation. And it's not our expectation based on pivots and yesterday's historicals or magical charts. It's our expectation based on implied volatility, just how far the market says the market will move. And sort of putting our money where our mouth is on the trade. Now, when I put all those pieces together, it allows me to add statistics, and with seasonals, and with technicals, and with fundamentals. So, speaking of fundamentals, one of the things I have to do is go over the news. We got some big news coming up this week, and you can't ignore it. So let's talk about it. We got the retail sales coming out in the Aussie dollar. That's not going to be that big of a move. That's like a 30 pip, 40 pip move. It's a very good pre-news butterfly. But Wednesday, not to disappoint, right? We got, this sounds funny, but we got a holiday week. You'd think they'd almost want to delay it. But ADP non-farm payroll employment change is tomorrow at 8:15 a.m. So expect some decent volatility on that report when it comes out. Where they're going to have trade balance on the U.S. and Canada and unemployment claims at 8:30. And then we're going to have the ISM non-manufacturing PMI on the U.S. at 10 a.m. So I expect very heavy dollar CAD volatility. Would be one of the areas that I would be focusing on. Okay? Simply because we have the trade balance report at the exact same time, and guess who their, major trading partner is. And let's go over here and let me look at, I'll pull up some pieces of information, pull up my stats. But, and then tomorrow night we have building approvals over in Australia. That should be pretty stunted. I don't have a lot of expectations on that. That's probably a 20 to 25 pip move, but it is a good time to hop in if you're trading at night to know when to focus on it. If you want to focus on Aussie dollar, you want to know what to focus on at night, 9:30, you ought to expect a decent Aussie dollar move. So let the news come out, pop in as soon as you get a pullback, take the trade. The way that I teach almost each and every day right here. So let's look at some of these reports that are coming out. We also got the UK manufacturing PMI. That one's coming out tomorrow morning at 4:30. And so right here, U.S. ADP, NFP, employment change. We are expecting, let's see, what numbers do we expect to be big? Oh, euro dollar has the biggest, or the most often move of 50 pips. The biggest move is pound dollar, but it doesn't move as often. So euro dollar would definitely be your currency of choice for trading that, except for the fact that we have the CAD announcement coming out at the same time. So that could add a lot of volatility to the CAD, and we'll probably make the CAD pretty cheap because it doesn't usually have a lot of volatility on this report, and its average is about 45 pips. So if you could go in and get that trade for like $20 on a straddle, or maybe even a strangle, going for 40 pips with an expiration goal of 2 hours, or maybe an hour and a half, I guess, depending on what time it comes out there. So yeah, like a 10 a.m. expiration. That could be a great straddle or strangle trade. If we go on and look at the pre-news butterflies, there's a lot of great opportunities. Dollar-yen is probably the lowest volatility pair leading into unemployment claims, and even through it. So dollar-yen right there, and then that'd be the pair I'd focus on. You could even, if you can get one for 45 pip credit, like 45 pips up down range, dollar-yen would probably be the perfect butterfly even into the news, and about a 20 pip butterfly range before the news. All right, stay right there. We'll be right back. We'll talk about a couple of the other major announcements coming up this week, so you're ready, because we won't be back tomorrow, but I want to make sure you have everything you need.
Take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed down a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. We're just going through the news that's coming up this week. Want to make sure you're ready and set to go. All right, so we also got the ADP non-farm employment change. We're talking about that. We're looking at going to do the dollar-yen, going into it as a butterfly. And now, the time that it comes out, that obviously is going to be a little bit challenging. Let's see here. Let's put the plan together. We got 8:15. You could do an 8 a.m. iron condor. You buy the lower spread and sell the upper spread. If you can get 20 pips of premium on that, I'm probably going in as early as an hour and a half before. So you're talking 7:15. Actually, it'd be 7:30. So 7:30, you can go in if you can get 20 pips wide and get yourself an iron condor on there over on the Nadex exchange. And that'll take care of you for that. And then I'd look at doing dollar CAD. So the other option would be euro dollar, because they have some major announcements coming out as well. But dollar CAD really would be my pick for tomorrow morning, just because we have a CAD announcement. So I think it'll be, even though it doesn't often hit 50 pips, the average move is 50, meaning when it hits it huge. And after all the QE stuff, I think unemployment claims has sort of risen back into light. I don't know if y'all remember when Bernanke first announced unemployment claims, or unemployment as being tied to QE, the interest rate, that made unemployment claims like wildly volatile. And then after a while, that sort of died off. But now the Fed has reintroduced tapering off QE. So unemployment claims going down is going to cause volatility. Unemployment claims going up is going to cause volatility. So focusing on the dollar CAD would be a very easy way to do that trade. Let's see here. What else do we have that's major news? Because we have a lot of news. We're going to have that. So, yeah, focus on 10-day expiration. That will take care of unemployment claims, trade balances, non-farm employment change. You can do all those if you hopped in like at 8 o'clock for the 10 a.m. expiration on the spreads. That actually lets you take advantage of all that on dollar CAD going for 50 pips. Between those 4 announcements, I would not be surprised to easily see a 50-pip move. Now, we also have the 10 a.m. ISM non-manufacturing PMI. And let's see. Let's check out some stats on that. If we get a 56.8 or 51.8 divergence from the expected forecast, 54.3, then that would be awesome. But overall, usually don't get major moves on that. Dollar-yen, again, a very, very weak pair recently on this. It's only broken 50 pips 4% of the time. Aussie dollar is only broken 50 pips 30% of the time. Both of them have an average move of 37 pips. So I would binary right into that news. So after it's over, basically, or actually right before it comes out at 10 a.m. So I'd be going like right into the 11 o'clock expiration. 11 o'clock expiration, binary, perfect binary setup. And then let's see, you got building approvals tomorrow night, 20-30 pips on Aussie, no big deal. Rolling on over, let's look at, we're going to have asset purchase facility, official bank rate, and rate statement. Thursday night, July 4th. If you're in America, you should not care. Because you know what? We got independence from Britain on July 4th. Who cares what their interest rate is? But if you're not in the United States and you want to trade, then that's definitely the time to trade the UK interest rate statement. So let's see, and the market should be open back up for you as well. Usually Forex markets are open anyway. Let's see here. We got pound dollar, we got pound yen. 80% of the time they move 50 pips or more with an average move of 90 pips. So it is a very, very good straddle strangle. It's at 4:30 in the morning. Be a great trade to look at. And then on Friday, got one last thing I got to tell you before I wrap up the show. But on Friday, you better be ready if you are trading, because not only do we have low volatility with the news, we got non-farm employment change. So USD CAD, that's your trade Friday morning. All right, have a great day.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% advantage plus. The plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.